Good afternoon. Welcome to Midcap Radar live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me is Hormuz Patakia. And at this point in time, markets are off the highs, almost a 60-point cut from the highs of the day, still in the green. But yes, there is some selling that we're seeing from the top. Midcaps have come off. Banking index in the green right now. So these are banks which are putting some pressure. But a lot of stocks on our radar today.
A lot of stocks indeed. And it's, of course, the first NSE Tuesday expiry as well. That's being a bit of a factor here. The Nifty bank is continuing to be the pain point for the index. Slipped into the red now, as have the broader markets too, have slipped significantly from the highs of the day. But before we move on to the markets, here are the headlines we're tracking at 1:30 this afternoon. The market falls significantly from the highs of the day, dragged by banking and financial stocks. The Nifty bank slips into the red, while the Nifty now is exactly at the 24,700 mark.
Stocks of sugar mill surges after government says it will not impose any restrictions on production of ethanol in the coming season, November to October. Industry experts see this increasing diversion of sugarcane to near 5 million tons from little over 3 million tons.
Sun TV has risen today after Avendus Sparks' buy recommendation on the stock with a target of 680 rupees. The brokerage has turned constructive on the stock after 5 years, positioning the company as a proxy for investors to participate in the monetization of sport.
It's a third straight session of gains for Sammaan Capital after the stock enters F&O, up over 11% in trade today.
And MobiKwik shares have also seen double-digit gains in today's session after the Abu Dhabi Investment Authority sold its remaining 2.1% stake in the company via block deals. The stock is up over 14%, but is slightly off the highs of the day.
Okay, all right. Those are the top headlines that we are tracking. But for the Nifty, it's a 76-point gain that we are seeing right now, but it's off 60 points from the highs of the day. That is courtesy Bank Nifty. So that is one index which is in the red currently, 87 points lower on the Bank Nifty at the day's low as well. We do have the mid caps, which were surging almost up more than 1% at a point in time. This index is up 0.5% right now. So there is some recovery which is underway, a wee bit of recovery, but we'll have to see which way things go because it's the Tuesday Nifty expiry as well that we have been talking about. But the show is all about mid-caps. We have to talk about mid-cap movers. Hormuz has gone across to that wall and will take us to the mid-caps that are moving around in trade.
Well, at the start of the session, it was a sweet start, continuing from where we left off in yesterday's session. And sugar stocks are leading that charge, although some of them are off the highs of the day, but still holding on to gains of anywhere between almost 7% to as high as 14% for stocks like Sri Renuka Sugars. A segment that has been doing well today is the entire PSU basket, and two of the most prominent names within that PSU basket. One of them is the defense names, and the defense names are at the highest point of the day or closing in on that. Apollo Micro, another 9% surge in today's session. Cochin Shipyard, Mazgaon Dock, HAL, all of them are seeing healthy gains in today's session. The other major segment within the PSU basket are the railway names, and they too have surged to the day's highest point. Look at RVNL, Railtel, Ircon, Rights, all of them seeing gains of anywhere between 3 to 6% in today's trading session. So it is the PSU basket that is contributing significantly to the gains in the broader markets. Stocks that are doing well on the volumes front, and is led by another PSU, that is ITI. 8% higher on that stock. Nalco, Indian Overseas Bank, continuing with that PSU trend, and tire stocks are doing well today. Apollo Tyres too is up nearly 5% on very strong volumes. And lastly, some newsmakers of the day. We just mentioned about MobiKwik, and that stock is still up 12%. Sun TV after that positive brokerage note, and Sammaan Capital, third day as an F&O stock and is up for the third straight day. Another 10% on the stock, of course, significantly lower than its 52-week high, Sonal.
Okay, all right. Some interesting names there. Thank you so much for all those details, Hormuz. Let's welcome Shrikant Chauhan for a technical check on the market. Shrikant, that fall from the highs, what is it suggesting? Will we see volatility till the last 1 hour of trade as well? Okay, Shrikant, you're on mute right now.
Good afternoon, Sonal and everyone. So for Nifty, it is very clearly indicating us that it is heading higher. But yes, because of the extended rally that we saw from yesterday's low, we are of the view that we may see some cool-off in the second half. Close to 24,650, 24,600, the market is having next leg of support. So in case if we see the market is dropping around those levels, there we should look for creating some long positions. But broadly, we are of the view that the market is going to remain in a broader range of 24,800 and 24,400 before taking any meaningful activity in the market. So we need to do
Shrikant,
more and more stocks, Vasavi.
Shrikant, good afternoon. In the stock-specific ideas, what are you recommending to your clients?
Good afternoon, Armos. See, like few semiconductor related stocks, they are showing good amount of buying strength in the market. In that specifically, we like CG Power, which is around 739, 740. Since last 2 days, the stock is buzzing and it is crossing all its important levels. While looking at its entire formation, I am of the view that the stock is under a pullback mode and it is heading for the levels of at least 800, which will be the lower high as compared to its previous high. So at current levels around 739, 740, it's a very strong candidate to buy with a stop loss close to 715. The other stock which we like is Park Hotels. And today we saw some buying interest in hotel stocks, but in that Park Hotel looks really good because it is in the range of 170 and 140 for a longer time. And now it is again heading for the levels of 170. So it's a buy at current levels around 153, 154 with a stop loss close to 145.
All right. Thank you so much for joining us with those names, Shrikant. With that, we'll do one thing. We'll slip into a break, but a reminder for our viewers, unlock a world of exclusivity, expertise and influence. Become a member of CNBC TV18 Access, our premium members-only experience on CNBC-TV18.com. The membership includes access to CNBC TV18's flagship events, interactions with our journalists, along with curated studio tours, e-learning sessions and masterclasses, and curated lifestyle benefits.
Welcome back. Slightly off the highs of the day is where the index is now 24,690s, whereas the Nifty 65 points higher on the index. That resistance zone of 24,750 to 24,800 coming into play in today's session. But putting the spotlight in today's mid-cap spotlight special, Ria is here to tell us more about Axis Gates Technologies and why is that stock our mid-cap spotlight for the day, Ria.
Well, yes, Hormuz, Axis Gates Technology has hit an upper circuit of 5% today after receiving a major order yesterday. But first, looking at what the company actually does, they are an engineering and R&D services company. They provide these solutions for global manufacturers across sectors like aerospace, defense, automotive, energy, electronics, and heavy engineering as well. Now, the key clients for the company include Airbus, Boeing, Safran, as well as the Indian Ministry of Defense. The promoters of the company is Rajiv Chandrasekhar-backed Jupiter Capital Private Limited. The current holding is at around 58.2%, which is actually down over the last 8 quarters from around 66.2% in June of 2023. Now, coming to the order that the company received yesterday, they have received pilot orders for cabin interiors as well as retrofit solutions with a total order value of $1.2 million US. They've received these orders from an aerospace OEM and an aircraft cabin interior company based in Europe and in the US. Coming to the guidance of the company for FY26, they're expecting a 40% year-on-year growth in the core domains in FY26. These are the aerospace, defense, and the AI domains of the company. They're also expecting 19.5% EBITDA margins versus just about 14% that we saw in last year. Going forward in H2 of FY26, the revenue and profitability of the company are set to accelerate significantly with a significant ramp-up in the defense segment as well, which currently contributes around 24% to the revenue of the company. The defense revenues are also set to grow by around 70 to 75% in FY26 versus the 300 crore revenue that the segment had pulled in FY25. And by FY30, the company aims to achieve rupees 9,000 crores in revenue. This is versus an FY25 revenue of just about rupees 1,030 crores with EBITDA margins of 14%. So in terms of the stock moves, the stock has gone up around 100% on a year-to-date basis. It is up over 10% over the last 3 years and up over 21% over the last 5 years as well. Just quickly coming to the valuations, the 1-year forward PE is at 64 times versus its 3-year average of 43 times.
Okay, all right. So that is about Axis Gates Technology. The stock is in focus today. Thank you, Ria, for joining us with all those details. But remember to tune into the all-new CNBC TV18 Prime, bringing you insights from policymakers, business leaders and economists shaping both the world and India's future. CNBC TV18 Prime decodes global shifts and the impact on Indian businesses, giving you unparalleled insights. Tune in to CNBC TV18 Prime at 12 noon for the Global Reset, at 1 p.m. for the Big C and Global Lens at 8:30 p.m. Welcome back. Well, further fall from the highs on the Nifty. It is up 26 points. When we started the show, there was a gain of around 60 points and there's been a sharp fall from those levels as well. The Bank Nifty too is down 0.3% and the mid caps too have come up from the highs. So just watch out for what's happening in the markets. The gains are not contained. We're seeing that continuous fall that's happening from the highs as well. Bank Nifty, by the way, is at the day's low as well. But let's get stock specific now and talk about Max Estates. Nitin Kansal, the CFO at the company, is joining us from the 21st Motilal Oswal Annual Global Investor Conference. Our discussion will be focused on the following points: pre-sales booking value and annuity rental income trajectory, commercial projects in operations, and indicative growth pipeline in the near term. So these are some points we'd like to discuss with the management apart from the other questions. So let's get started. Nitin, good afternoon. Thank you so much for joining in. Well, there's 6,000 to 6,500 crore pre-sales target that you have in FY26. What is the pipeline for this guidance that you have? And will it be all luxury projects? Will it be a mix? What kind of price points are you focusing on?
Thank you. Thank you so much for getting me on the show. So in the current year, what we are planning to do is a launch of close to 9,500 crores across the key markets of Delhi NCR in Noida and Gurgaon. This is across 3 projects. Against this 9,500 crores, we're expecting to do a sale of 6,000 to 6,500 crores. These projects are expected to be launched in the second half of the current financial year, and these would be more in the price range of 20 to 23,000 rupees a square foot, in line with what we have done in these micro markets area.
Nitin, good afternoon. Thank you for joining in. What would be your rental income projection as well? You have a rental potential of 725 crore. Where do you stand at currently, and by when do you expect to reach that mark? And what would that do to your consolidated debt? What is that number like right now, and does that trend down as the year goes forward?
Yeah, so as we speak, we are currently in a rental run rate of close to 150 crores. What we have projected is by FY29, we would have a complete rental portfolio of close to 723 crores. We expect these numbers to be gradually scaled up in FY28 and 29. In our commercial portfolio, currently we have got New York Life Insurance Company as a 49% partner. This rental is currently operating at an EBITDA margins of 90 to 95% spread across Noida and Gurgaon.
Okay.
The current debt which we have on the books is around... Yeah, the current debt which we have on the books is on 30th June is approx 1,500 crores. This is predominantly on account of commercial assets. Of this, around 900 crores is towards lease rental discounting, and the balance is towards the construction and the finance. The important point to note over here is, against this rest of 1,500 crores, we are having a cash balance of close to 1,650 crores, resulting in a net cash positive of close to 150 CR.
All right. Are you expecting any more investments coming in from New York Life, Nitin? Is it something which is on the cards? And this 725 crore of potential that you're seeing in your lease assets, what kind of portfolio will you be seeing? What will the size of portfolio be in that case?
So we would be looking at a total portfolio size of in the range of 6 to 7 million square feet once this entire project is completed and delivered. New York Life, as we speak, has already committed a total capital of close to 1,800 crores with us, of which they have already deployed close to 1,600 crores. They have been our partners in all our commercial assets, having a 49% shareholding, and they are also our shareholders at the holding company, holding 21% shareholding. They evaluate each project on an individual basis and deploy accordingly.
But Nitin, we are almost 2/3 of the way into the current quarter as well. How has the demand situation been on the ground? And I particularly ask you this question because of these global uncertainties that we are currently surrounded by, and that would or may impact certain sectors. We have also seen layoffs being announced by a few major companies in the country. What does that do to demand on ground, especially within your commercial portfolio?
So although it does have a negative sentiment bearing in case we see layoffs happening in the tech sector, but what we have seen in our portfolio currently is we have not seen any impact. Our rental portfolio currently stand at 100% leased with a strong demand coming from the GCCs. As we speak today, our rental portfolio entirely is leased, getting a premium of 30 to 35% over the micro market. What we believe a quality product is able to command a premium remains kind of neutral to the demand vagaries at this point of time.
Got it. Nitin, this is about the quality products that you would be providing in the commercial portfolio, right? But the other problem that has been happening in the NCR region, that's where your majority portfolio also is present, is the pricing premium. The fear is that pricing premium would go down. You will not be able to, or the builders will not be able to take price hikes the way they have been. What's your take on that? And secondly, while you can build a quality product, the infrastructure may not be that great, because whatever we've been seeing with rains across Gurgaon and Noida, even across flats which are ranging 50 to 100 crore rupees, but the infrastructure is not supporting that. What happens to pricing and demand in that case?
See what happens, infrastructure does pose a challenge. As you would have seen, yesterday's rains kind of exposed the infrastructure challenges at Gurgaon. But having said that, there has been a significant progress which is being made on the infrastructure side. But as far as our demand is concerned, what we believe is that we are able to provide a significant value add to the customer, which kind of protects the demand which comes to us. Furthermore, we have also been able to segment the market in the senior living and the normal residential market, which kind of helps us in protects our prices and demand both.
So based on all of this, Nitin, how does FY26 shape up for you? Is there a collection guidance figure that you have zeroed in on? If you could tell us more about that.
Yeah, sure, Homas. In the current year, we have given a guidance of a collection of close to 2,600 crores. This 2,600 crores is made up of two components. We have a component of the inventory which we have already sold, for which we are expecting a collection to be in the range of 1,500 crores. And as we speak today, we have already made a collection of close to 450 crore against that. We are expecting another collection of 1,200 crores to come from the new sales. Since I previously mentioned, we have a guidance of 6,000 to 6,500 crore rupees for the year, and we do an equity distributed collection plans. We are expecting 1,200 crores to come from the new sales, which is expected to come in the second half of the current financial. So all told, we are looking at a number of 2,600, of which we have already collected close to 400 crore rupees.
All right, Nitin. Thank you so much for sparing time and joining us today. Wish you good luck for the rest of the year as well. Nitin Kansal there of Max Estates joining us from the sidelines of the 21st Motilal Oswal Annual Global Investor Conference. By the way, the market has taken a complete nosedive from the highs of the day from where we were at the start of the show. The index has now slipped into the red. And let alone 24,700, we are now under threat of breaking 24,600 as well on the index. So it's a 150 point downtick from the highs of the day. Not only has that 24,750 to 24,800 range turning out to be a point of resistance, but even the 20 DMA, which was around about that 24,700 range, could not be sustained. Of course, it's the weekly expiry of the Nifty 50 contracts. We need to keep that in mind as well. But for now, the broader consensus is that the 24,700 to 24,750 mark is a barrier, and the index could not sustain at those levels. And just as we speak, the index has also slipped below the mark of 24,600. What is contributing to this fall to the downside? ICICI Bank is one of them. Bharti Airtel has also slipped to the lows of the day. That is a contributor to the downside as well. Mahindra & Mahindra, Kotak Mahindra Bank, Larsen & Toubro, the 5 major contributors to the downside on the index currently. But what has also been a major contributor to the downside has been the cool-off seen in Reliance Industries. At one point earlier in the day, the stock was up 2.5%. That has now cooled off from the highs of the day, has almost halved from its intraday high. So from around 2.25% gain, the stock is now up only 1%, and that too has had a bearing on the market. So that's how the index has shaped up. As of now, we go into the final 90 minutes of trade with the index at the lowest point of the day. We call time on this edition of Midcap Radar. From Sonal and me, thank you for watching. MF Corner on the other side.